And welcome to Recovery Report Live. I'm Dan Odess, president of GlobalPro, where we manage risk to recovery, and we have managed more than $1 billion in recovery. We've represented thousands of community associations and business owners in the placement of insurance throughout the years. We are in our 11th year, and we are excited about this show as it continues to improve and grow. The content's getting better. The studio, I'm here in the Griffin studio, it is absolutely kick-ass. We have all kinds of new equipment. We've built out this incredible facility to make sure that we're continuing to provide you, as policyholders, the information you can use. Whether you're a business owner or community association throughout the United States, there are so many things coming at you, whether it's changes in legislation, changes within the policies, Pricing has obviously gotten a lot of focus here, and there's been a lot less conversation about what is actually in those policies and what's there to protect you. So whether you're a business owner, a community association manager, or board member, all this information is for you to provide you better insight as to what's coming, what changes to expect, and we continue to do that every single week. Here in Florida, we're seeing lots of legislation action. We saw an accountability bill that was sent to the governor's desk for reporting. They want to hold the surplus lines insurers a little bit more accountable to what's going on. Will it work? Will it change the tides? Will it make more insurance more affordable? Time will tell. However, one of the big conversations I've been having, as I've noted in prior broadcasts, with local authorities, whether it's your commissioners, it's your mayors, your legislators, is it the price, or is it more about what's in that insurance policy, where these business owners, community associations should be focusing? With all the focus on reserve study changes and everything else, why do we talk about it? Because Florida is a bellwether state, and when we see a lot of changes that occur here, we do sometimes see, or often say, let me correct my statement, often see other states adopt those changes or some sort of hybrid of it. It gets people thinking about making changes, and considering the migration into the Florida and Texas region, you obviously want to be paying close attention to this if you are in either Florida or Texas, because I assure you that Texas will consider some of what is going on here in Florida, whether it's the inspection periods for the lot of community associations, or if it's these revisions to some of the insurable laws and the insurance laws. And our very own Bowlby had spent some time in the Texas legislature actively working with those folks there. But things continue to evolve here in Florida, and things continue to change. And I kind of feel as if the pendulum might be swinging back in the direction of the policyholder. We saw such aggressive legislation attacking policyholder rights under the disguise that it was somehow going to improve the insurance market here in Florida. And as soon as they passed these bills over the last 2 years, the legislators were quick to say, oh, time out, don't expect to see any sort of changes in the short run. It's probably going to take 18 months. And then I actually just recently saw an article, another terrible reporting. I mean, I quite honestly, I just wish people would just report facts and not insinuate or interject some sort of garbage opinion that really is completely off base. I saw an article that came out about the changes that we recently saw in the Florida legislature as it relates to some of the one-way attorney's fees, and it made an inference that the changes that they would expect, or the evolution of the insurance process would benefit the policyholder by making or attracting more insurers to the market. But they feared that because of the new legislation that went into place regarding the one-way attorney's fees, the tort reform, that there was so much litigation, so many lawsuits filed, and there's so much litigation that we basically took 5 years of litigation and shoved it into 1 month. Well, first off, the numbers don't support that. Second of all, it noted twice in there and tried to infer that had something to do with property insurance, and it literally had nothing to do with property insurance. They were talking about tort reforms that most often have nothing to do with property insurance, and they weren't even addressing the one-way attorney's fees revisions that were actually passed. So the entire article, again, written by a very, very what I would believe to be a reputable source. However, we saw some horrific reporting just recently, and I just wish this type of reporting would stop, because it's peddling this idea that the policyholders' advocates, whether it's public adjusters, attorneys, even brokers, are contributing to issues in the market when it's not. It's the accuracy in the reporting by the insurance companies, the earnings reportings. What are they doing with the money? How are they doing it? The type of products that are being sold. Let's start transitioning and talking about those things. And I feel as if the conversation is kind of somewhat moving in that direction. Because even in this article, they clearly were trying very hard to jump on these property insurance issues to try to somehow relate it to the conversations and issues regarding that are plaguing really the auto industry, which has much or nothing to do with what we talk about here on the Recovery Report, because we're talking about property casualty types of insurance for business owners, for community associations primarily, high net worth individuals oftentimes, but really not auto. And when you're trying to relate the auto market and the property together, it's really not in the same. In fact, if we rewind history and we go back and look what happened when Republican Governor Chris was there, he told State Farm directly, if you want auto, then you need to sell property. And the market shifted, it changed, it became more competitive, and we entered into a very good policyholder period of time where we saw competitive rates, we saw good products. It transitioned, it changed things. So let's hold insurance companies accountable, and let's start shifting the conversation in that direction. And ironically, even though I've been saying accountability, we need to hold the insurers accountable for literally months on this show, talking about the upcoming legislation session here in Florida, it's interesting to see that the bill that was recently, that went to the governor's desk, was actually titled that, Insurer Accountability Act. So things are changing. I'm optimistic about it. We saw an aggressive legislative session in Texas, and I want to transition the conversation over to our very own Rob Bowlby, who is joining us today with a guest in Texas. And as soon as they join us here on screen, we're going to get into an awesome interview with Rob and our guest today, Kevin Davis. Thank you guys so much for joining us today. It's a pleasure to be with you both here on the Recovery Report. What's going on, Rob?
Okay, well, thank you, Dan. So we're going to talk about two things that we love to talk about on the Recovery Report, insurance and community associations. And also a third thing that as a former banker, I've always been really interested to hear about is cyber risk. So today we have with us Kevin Davis, the founder of Kevin Davis Insurance Services. They are the #1 provider of insurance to community associations throughout the country. So he's a great guest to have on to talk about this. They have deep expertise in cyber risk, directors and officers, liability, and crime. And so, Kevin, welcome to the show. Thanks for being with us today. And first of all, if you could kick off telling us a little bit about the firm and how you developed this expertise and why the focus on community associations.
Sure. Well, it's interesting. For community associations for the past 40 years, I've been involved in community associations. I've been involved with them before everybody knew what a condo was. We specialize in condos, co-op, timeshares, HOAs, everything for the past 40 years. And so I know all aspects of it. So about 10 years ago, when cyber first started, people started talking about it in terms of data breach, we got involved in it. We jumped in there. We specialized with a carrier, Travelers Insurance, who did a lot of cyber. And we partnered up to say, what are the exposures for community associations? What do condos face when it comes to cyber threats? And so over the past 10 years, we have exactly what we're looking for and what community associations need to know about in terms of cyber law. So we've first of all, I've nailed community association. I know they have a role to manage the risk, to take care of the risk, to collect assessments, to manage the property. But now they have this new thing, and that is you got to make sure that data they have is protected. So that's our specialty.
Okay. And so just like with other types of insurance, I'm sure there's some unique and outlier losses, especially in cyber risk, that are kind of head scratching. But I also suspect there's some stuff that you guys continue to see day in and day out related to cyber risk. What are kind of the frequent things you're seeing happening to community associations in the world of cyber risk and cybercrime?
Sure. Now, this is really interesting because when we first got into cyber, we talked about data breach, right? Stealing the data. What happened, though, is that over the past 4 or 5 years, data breach has not been an issue for community associations. The issue has been social engineering. That is the #1 area, the fastest area of problems that we see, not only for community associations, but for everybody. Now, for those not familiar with the word social engineering, what that means, you're being tricked into giving you the information. We see it all the time. How many times do you get these emails that say your UPS is late, you're being canceled for your Netflix, your Amazon, or they want you to click on it and steal from you. So right now, that is by far the number one area for claims, not only for community associations, but for everybody else. Now, here's why it's so important for community associations, because you have the board of directors and you have the management company. So the independent management company talks to the board of directors, and sometimes the criminal can get in the middle there and divert funds. Perfect example is this. The landscaper, he gets hacked. The landscaper gets hacked. All the email addresses now is owned by the criminal. He sends out these emails and say, pay now or to avoid late fees. So what happens is, and they say one more thing is really important. Here's my new bank and routing number. As soon as you see a new bank and routing number, that means it's a fraudulent. It could be fraudulent. You got to check on it. But most of the times, the manager, the board, they don't look at it. And that's why most of the money is being gone. That's probably the number one area for cyber losses for community associations.
So you bring up some great points, and I've been intimately involved actually in 2 cyber thefts for community associations that were in the 7-figure range, and we've seen this obviously a rise in cyber attacks for any business. These are nonprofits, though, right? These are a community's money, this treasure chest of money for community unit owners that give money for the services of their property. So it's not as if like you can go out and just change your business strategy and earn more money, right? I mean, this happens, you are cash strapped. Like this can cripple your community association in ways where a business may be able to pivot or try to do something aggressively with pricing to try to make up for the shortfalls if they didn't have insurance that covers it, which brings me to my question and a point of conversation I'd love to talk with you about is, some of the things you talked about, a little more technical terms, spoofing and phishing and some of these other things that you hear the technical IT guys talk about. But let's not confuse our audience with those. But if you've heard those words, that's what Kevin's talking about, right? So now what is covered for a community association? Because, and I want to preface it with this, and this last bit I want to add is that as insurance coverage experts, which we are at GlobalPro, we know, and you know, as an insurance expert as well, that it's a commercial policy form. And a lot of times we see insurance companies use forms that were probably primarily intended for a business, and they discuss income coverage and things like that. We don't see a lot of community association have those types of coverage. So what exactly is covered for a community association for cyber threats and risks?
Okay, that's an excellent question, because a lot of times when you get a cyber risk, there's 10, 15 insuring agreements in there, and most people have no idea what they are.
None.
So what are you looking for? You divide it into 3 areas. Area number 1, the data breach. So the first party. So somebody stole your data, and now you got to protect yourself for the stolen data. So that's number 1 coverage. You want to make sure that all the expenses incurred when it comes to notification costs. So all the things are covered when your data is gone. Now, that's number 1. Number 2, you have to have crime coverages. So when there's a theft of the money directly, there's no theft of data, there's theft of money, which means that either theft, I tricked you into giving it to me, or I sent you an email, you can click on it, or I actually walked into your office and stole your server, or looked and saw your passwords and diverted funds inside your office. The next area is ransomware. Ransomware is going to be a big problem for any community association out there that is brand new. If you're a brand new association, you have all electronics in there, we have key cards and everything, and you have a server on the premise, you're in trouble. People are looking for a ransom demand. So they'll come into your office there, try to go into your server room, put a thumb drive in there, or try to figure out some way to get to that server and lock everything down and charge you a ransom to get it. And the fourth area, and the area that we haven't seen yet, but once it comes out, you're going to see a lot of claims. That's the liability part of it. That's when you're sued because you failed to mitigate, right. You failed to have proper security. That's what's going to make a big difference. The reason why cyber hasn't taken off is because the lawyers haven't figured out a way to hold somebody accountable yet. Once they find a way to hold people accountable, you're going to see cyber take off in ways you never heard of before. Right now, if you have a cyber claim in a community association, you're talking about 30, 40, maybe $50,000, except for the one you had, which was six figures.
Yeah, it was 7 to 2. And
Yeah.
yeah, they spoofed this community association and actually got into their bank accounts and drained them. And it was it was basically a reserve account that they had, and
Sure.
they physically got into the servers. Someone was physically on site, did something there, and then remotely logged in, and got all the banking information, and then slowly started to obviously drain the accounts. And it was a two high-rise properties. One was over 40 stories, the other over 50 stories. So you had a lot of money there, and on reserve. And they had one of them had a big construction project coming up. And it was, let me just say, it was painful to watch and to see and to be a witness of, and it was interesting to see the navigating the claims process is tough, right? The things you need to do to make a claim for that. It's uncharted water for a lot of people. And again, we see a lot more of this on the business side, right? This is not it's been a topic for community associations, but I don't feel like it's been like a hot topic, right? Because they're like, oh, what do they have? A bunch of email addresses. No, you have these people's phone numbers, social security numbers sometimes, birth dates, addresses, names and phone numbers of all their relatives. I mean, all of that can be used by a hacker to figure out what your password is and also to steal your identity. So your community association has this stuff on file, right? Because you filled out an application, did a background check, right, to become a member or to own the unit in a building, depending on the requirements of buying a unit in a building. They have everything on you and then some, because those background check reports are full of all kinds of personal information that may be needed in order to steal someone's identity. So the name of your dog may be your password for something, right? So just understand, that this is in the control and possession of your community association, a nonprofit. Again, not a business, not a for-profit that needs these protections. So I want to dive a little deeper into ransomware, because that's definitely where you see, I think, a lot of, in the IT world, a lot of risk for these servers. And now by the way, that's another thing too, right? Is that rewind 5-10 years ago, most associations probably didn't have a server, right? They had a computer, right? We are technically, logically so advanced right now where we were 5-10 years ago. There are servers, they have IT specialists on staff. So break down ransomware and how that fits all into this.
Sure. The ransomware is a unique problem right now because it's an industry, meaning that if I want to figure out a way to steal money, I can just Google how to commit ransomware. Okay, and they tell you exactly how to do it. And then there's an 800 toll-free number that you can call up if you have been, targeted. If you have one of those warnings, okay, you have been locked out of your system, they can call you up and tell you how to do the whole thing. It's a whole business set aside that you can really do it. The issue really for community associations is that they don't understand that if they have a server, they have exposure. And one thing we haven't talked about is the management company are the ones that really have the exposure, because they're the ones that have all the data, they have the information, they're the ones making a lot of decisions. They're the ones that have they have just as great of a financial loss as the board of directors of the condominium. Now, one thing that they have to understand is that the board of directors of the condominium give their data to the property manager, or the property manager may collect it themselves. And so both board members believe they have no exposure. They can say, wait a minute, my information was stolen, I can't believe it. The property manager did something wrong, and the property manager should be responsible for it. The problem is the property manager can come in and say, guess what? It wasn't us. We didn't do anything wrong. Nobody else was stolen, nobody's information was stolen but yours, so you can't blame us. So the board of directors has that exposure even though they feel they don't have it. And that's the one thing, if the point where they get off is that one point, that they have the exposure also.
Do you or don't you pay ransom if they demand it of you?
There's two parts to it. Number one, yes, if you have the coverage. The key thing, it's so hard because you got to have all four of those coverages. And all four of those coverages meaning, again, you have to have the data breach, ransomware, cyber crime, and the third party for liability. The cyber crime is important because if there's a loss, it's under the cyber crime. Cyber crime is where we see all our claims right now. The ransomware, if you have the coverage, yes, it's covered. There's two parts to that ransomware. Number one, you get your data, you get the key to unlock it. So what they do is give you the key, you pay your Bitcoins, and then here's the key to unlock it. But in the meantime, they have your data. So now you have a data breach loss on top of the ransomware loss.
Got it. So, I mean, complex to begin with, right, Rob? I mean, I think this is it's amazing. By the way, I love the list and how you're counting down the issues, because I think we're going to summarize this and definitely give this information back to our audience. So, I mean, Rob, this is an awesome topic. I think this is fantastic. Let's break this down further for sure.
Yep, and it goes far beyond community associations. So one, you answered the one question that I was thinking: does the policy pay for the ransom? Which I understand you have to have the coverage in the policy, but it's good to know that's available. The other one that I was curious about, you started off, Kevin, talking about social engineering, which is when an employee is tricked to wiring out, 6 figures, 7 figures, some large sum of money. Is there coverage available under that cybercrime bucket for social engineering, or because it was done by one of your own employees, is it not a valid claim?
Oh, okay. Social engineering is about the past 4 or 5 years, it's now become the easiest way to get money. Historically, it's never been coverage for social engineering. So in other words, if you have to be tricked into losing something, then that's just, you got tricked into it. There's no insurance available for you being tricked. You gave that money away. So there's no insurance available for it historically. Now, several insurance carriers are saying, we provide social engineering coverage. Because most people thought it was either wire transfer or fraud because it was fraudulently done. So people got confused because just because we gave money, you gave the money away, and it was not their money to give away, wire transfer fraud is the coverage. No wire transfer fraud because you gave the money away. Once you give that money away, no coverage. There are a handful of policies out there that have social engineering coverage. So the one lesson we can tell everybody, to talk to the insurance provider and ask them, do you have social engineering coverage? If they say no, please find some immediately, because that is the number one area where you're going to see cyber claims, because the easiest thing for me to do is pick up the phone and try to trick you into giving me your information. And all I have to do is say, to avoid late fees, give me your information right now. Here's my new bank, my new routing number. And then guess what's going to happen? We're so busy, we're so active. Okay, here it is. And you send it and it's gone.
Yeah, and Rob, you've been on the banking side of this stuff too. I mean, you've in your prior career, right? It was
Yep.
So this is you've been right there in the midst of all of it. So it's interesting to kind of see how it's evolved for community associations to say.
Yeah, and we saw it. I mean, and we were a large institution, so we saw it a lot more frequently. But just within the North Texas client base, we'd see 4 to 5 of these per month. From businesses, most of them 6 figures and up, and once that money is wired out, it's real hard to get back. It moves fast. So Kevin, let me ask you this: now that you've outlaid these 4 kind of buckets you need, and the coverages are available, but still, what are some best practices that HOAs need to be doing to prevent these types of losses? Because it's always better to prevent the loss than to try to fight with the carrier to get the loss paid.
Okay. The best way right now is what's happening a lot is dual. We have 2 pieces of data. So they will call you up and call your phone, and they make sure that little numbers comes up on your phone. They want to verify who you are. As long as they verify who you are by that phone or by some access, that is the number one area. Now, the easy area is changing your passwords, making your passwords as complicated as possible. Passwords don't matter anymore because people get access to the passwords. They can find the passwords. But you got to change it. Update your system. I mean, every time you get those updates, please update your system. You talk about ransomware. One of the first ransomware that we've seen was based on the way Microsoft was put together, and they found somebody found a backdoor to get in there. And once they found that back door, they send these patches out to fix it. If you didn't fix that patch, then you're open up to that virus. to that for ransomware, and it was the biggest virus ever happened about 5 or 6 years ago. I forgot the name of it, but that started a lot of this ransomware. And that's when we started getting involved in it. You got to have a policy, a cyber policy that's designed to pick up those 4 buckets. If you pick up those 4 buckets, then you should be safe, and it should be a 7-figure limit on it. You should now for community associations. It's rare to have that kind of money in there, but if you have a reserve account that's 7 figures, you got to make sure it's insured under the cyber. You got to make sure it's insured under the crime, just in case it's stolen by an employee. Because the employee can take it themselves. So you got to make sure it's covered under all aspects of it. And one thing we haven't talked about, I want to talk about it was on the director and officer liability side. The D&O policy is so important because what's going to happen is that on that one account you had where 7 figures were stolen, guess what they're going to do? They're going to go after the board of directors for failure to properly supervise, properly have the knowledge, properly to do the things so that money would not be stolen. So you're going to see a D&O lawsuit there. So on top of that, losing that money, you may end up with a $250,000 defense cost, or $100,000 defense defending yourself because you screwed up as the board of directors of that condominium. So the D&O policy will come about as probably one of the most important policies when this is all said and done, because you will be sued when something like that happens. And you'll be sued, not only the board will be sued, but the property manager will be sued also.
So keeping in line with that and thinking about what went on here in Surfside, what's your takeaway from that on with regards to the structural integrity of building and inspections? I mean, I mentioned earlier in my monologue piece about Florida being the bellwether, and we're seeing what's going on with the changes as they're evolving. Let's say it that way, put it politely, because they passed some laws. They then realized how much of what they wanted to accomplish is impossible. Actually, there's not enough engineers and architects in the whole Florida to do it. And now they're trying to fix those things. And I think everything is mostly well-intended. There's good intentions behind it. Most of it is good intentions behind it. But how do you see that association's decision in the way in which that whole situation continues to play out? Quite frankly, I was just reading an article today about how they're still dealing with some of the general liability issues and stuff like that related to it, and there's some of the issues are still open. How do you see the coverage, and how do you think that terrible situation is going to impact community associations, generally speaking, throughout the country, and particularly in Texas?
Yeah. Well, I tell you right now, there's a lot of uncertainty out there because of that. We write about 10,000 policies in Florida, 10,000. So it's our biggest territory in the country. And when that building went down, it opened up something that we never realized before, that it's possible for 100 people to die in one situation in a condominium. We knew a balcony could collapse. We knew garages could collapse, but we never thought a building would collapse. Once that building collapsed, now all of a sudden, from an insurance point of view, we have to say, what do we do about it? How do we guarantee that we won't lose as much money we lost in this one building? I mean, every carrier said, here's your limit. The D&O carrier said, here's your limit, and that's not even a D&O claim. A D&O claim excludes property damage, but they gave their limit. Everybody just tendered a limit because this is one of those things we weren't prepared for, and to this very day, we don't know what to do about it. So right now, what we're looking at is maybe collecting reserve studies from every building out there and making them mandatory that you at least have one. The problem is they had a reserve study. They even reserved, but they didn't do anything with the money. I mean, could you imagine? It's like the $7 million, the millions of dollars they had sitting there and not ever using the reserve. So it's a problem that we, from an insurance point of view, we don't have an answer for yet, because for the first time, we see something that we didn't think was possible.
True. Yep. I mean, Rob, a lot to think about there, huh? A lot of changes coming down the pipe. Yeah.
Well, there is, and I tell you one thing I'm thinking about is I know one of our missions is to educate community associations and policyholders through our continuing education classes. This right here, this topic of cybercrime, and as it relates to D&O insurance could be a topic unto itself. So we may be seeing you again sometime, Kevin, to do some joint education, because this was incredibly informative.
Yeah.
Mm-hmm. Good.
No,
Kevin. Glad you enjoyed it. There's a lot there. There's a lot to it.
So, Kevin, how can our audience find out about you, your firm, and get in contact with you?
Sure. We also specialize in education. What we want to do is say, listen, we know right now there's a lot of people out there who have no idea how to run a community association, how to manage one, what the responsibilities are. So what we do is go out there, we give pointers and things to look for to stop it. So go to our website, which is kdisonline.com, and we have a lot of information in there, a lot of useful tools in there. And we also go to YouTube at KDIS Online, and we have a lot of videos there to kind of really talk you through a lot of things we've talked about today.
Well, that's awesome, man. Hey, Rob, Kevin, thank you so much for joining us here today. I appreciate you guys participating in this. Has been an awesome broadcast. A lot of great information. I know our audience is definitely going to benefit from this. This is a fantastic one. Again, love how you just, you counted out the different types of policies, everything else. We're going to make sure that information finds its way into the description on this broadcast so that our users have it there, and our viewers, rather, not users, our viewers have it there, and use it as a resource, right? And check it out online. You heard him say his website right there. It's fantastic. Thank you guys again for joining us here today.
Thanks a lot.
You're welcome.
All right, guys. Well, this has been an awesome broadcast. I'm appreciative of having on industry experts just like that deliver actionable information you can use so often, all the time. And it's there. It's there on our YouTube site. It's on our website. We're going to have it on all our social media. How are you going to know when we go live? Well, you make sure that you hit that subscribe button, like us, and follow us on all our social media. And you're going to know when we go live and we're delivering you information you can use just like this. It's incredible to have our very own Rob Bowlby on. I'm going to be joining him next week in Texas for the CIA conference. I'm looking forward to joining him, as well as all the other industry leaders in Community Association Institute. We can't wait to be broadcasting from Texas, from talking about what's going on with community associations, more conversations just like this. And like I said already, if you want to know when we go live, hit that subscribe button, like us, and follow us on all social media, because we'll see you right here, same place, same time on the Recovery Report Live.